Our country has just gone through one of the greatest wealth transfers from the poor middle class to the wealthy that we have ever seen. And it was all done very sly, and no one saw this coming. At least I didn't. You see, we had the pandemic that took place 5, 6 months ago. Actually, a little bit more than that now. I'd say back in January. So we're talking about 8 months ago. And during that time, we all had the very much same mindset that the Armageddon was coming, where we're going to have the next real life version of the movie Contagion, and we were going to have the military knocking at our doors, stealing our canned food and taking our bullets. But that didn't happen. In reality, what happened was that we went from having a very fear-based, news-driven cycle telling us that we were going to be dying on bus stops and passed over, and that this was significantly worse than the flu, and that the death rate was significantly higher, and that no one knew how much this could spread, to, well, actually, you may be asymptomatic, and in reality, you may not even know you have it and just go about your day. And I'd like to know how we went from this could be the Armageddon to, well, it's just asymptomatic and you may have it and you don't even know it now, and that's actually the normal thing. There are so much questions and so much speculation that has transpired, I think, throughout the American people over the past 8 months. And I'm certainly in that camp. Not only did we have, and don't mistake this when I tell you that I do think that the pandemic is a very serious thing in terms of health and things of that nature. But I don't think that it's anywhere near as severe as we were originally led to believe. And that's the concern. In addition to that, there is a very, very significant difference between the stock market and between the economy. So I am a day trader, and I'm a swing trader and an investor. I'm a little bit all of the above, depending on the day that you catch me. And I follow the markets very closely every day for hours on the day, and I have for years. And one of the things that I noticed is that you have something called job reports that gets released usually every Thursday. And usually when there is anticipation of a poor job reports, the stock market then follows suits and kind of falls down because, there's high unemployment. People are concerned about purchasing. Businesses are concerned about selling their products and the services. And so the stock market takes a dip. In addition to that, we noticed that every single week, all the way back into pre-March, every week the infection rates were consistently being higher and higher and higher, and the death rates were being higher and higher and higher. And I also noticed that the stock market was also higher and higher and higher. One of the things that I noticed is every single time there was a news story that was released on CNN or MSNBC or whatever website you follow about higher death rates or higher unemployment, I noticed that on that particular day, the stock market still went up. In addition to that, one of the key indicators that determines the price health of a stock, or basically whether a stock is a good stock that's going to go up or not, is earnings. And what occurred, I noticed, is with earnings, a lot of the companies came out and they stated that their earnings was going to be bad because of the pandemic. Facebook came out and said that they badly missed earnings, and they said that their forward-looking guidance for the second quarter earnings was also bad. Now, a lot of investors, and when I mean investors, I'm really referring to the professional investors, they do not like hearing bad earnings, and even worse, they don't like hearing bad guidance. And the reason being is that they're saying, hey, our situation is bad, and our future outlook is going to be bad as well. That's one of the quickest ways to make a stock drop in the short term meaning 3 to 6 months, like nobody's business. And do you know what happened when Facebook came out and said that their forward earnings guidance was going to be lowered and that they had missed their earnings for the first quarter? The stock went up 5% the next day. One of the most weirdest things ever, at least until you sit back and realize what happened. Well, what happened is that although earnings was missed, although the pandemic affected millions of people and affected hundreds of thousands of people, although unemployment rate was literally at Great Depression levels, the stock market just didn't care. And the reason that it didn't is because the Federal Reserve, they didn't just put money into the market to help sustain from a stock market crash or depression. They actually did an extreme wealth transfer. And what they did is they lowered their monetary policy, which basically affected the way that banks are able to borrow money from each other on a nightly basis. They lowered the interest rate. They eased their monetary policy significantly. They also did a lot of bonds purchase buybacks. And so what they did is they did a lot of bonds purchase for companies and even like junk bond companies. And they instituted, I should say, they implemented so much liquidity into the markets that the markets just flat out didn't know what to do. In addition to that, a lot of the bonds that they purchased was for large institutions such as the large companies, the Apples, the Facebooks, the Microsofts, and they gave them this federal taxpayer public money, and they told them that they didn't have to pay the money back if they met certain guidelines. And so originally they were required, if you were going to receive government money, to allocate 75% of that to your employees, employee payrolls, things of that nature. And then the government lowered that to only 60%. And then it turns out that they just basically told them, well, you don't even have to pay the money back. And so can you imagine literally working a 9 to 5 job, making, I don't know, $40,000 a year? And then the government comes to you and says, hey, how about we just give you $20,000 if you agree to, I don't know, stay at your job for another 6 months. It's a loan, but then you got to pay us back. And then you find out a month later that you don't have to pay the money back. That's kind of a rough analogy, but in essence, that's similar to what happened. I mean, they intended to support the economies, but in reality, what they did was they put so much liquidity and they gave so much money to the businesses through the bonds purchase and through the lowering of the monetary policy that basically it was just free money. And so the companies, they didn't care that the earnings was awful. They didn't care that the unemployment was awful and the people were laid off. They literally propped the markets indefinitely. It didn't matter about earnings. It didn't matter about whether you bought the next, iPhone, or it just didn't matter. The stock market kept going higher and higher and higher. And this in my lifetime was one of the first times that I can honestly tell you guys I've never seen anything like this before. Even back in 2008, if you guys were around to remember that, it took approximately 15 months for the stock market to recover from the 2009 lows. We didn't get back to those highs again until about 3 years later. Well, it took us 4 months to get back to it this time. And that's just because they put so much money into the economy. And and when I say the economy, I should say the stock market. Now, what they did for the economy is they helped sustain us. So if you lost your job, unfortunately, heaven forbid, well, the government ensured that they were going to give you enough money to sustain yourself and maybe even a little bit more for a few months, which is great. But it's a big difference between getting a few $1,000s more a month and then getting a few $100 million more. And that is exactly the dichotomy and the difference between big business and regular Main Street. And so where do we go from here? Well, one, we can continue to complain about it, and we can just kind of, gripe and moan, or we can do something about it. And if you guys have ever heard the motto, if you can't beat them, join them. Well, I think that's what you should do here. And what I mean by that is, yes, if you're working, great. If you're not, hopefully you are still being supported by the government. But the most important thing here is to make sure that you're investing. You see, that's the key. If you, like a lot of hundreds of thousands of millions of Americans, were in the stock market, you would have been out great. You would have made out great because you would have also been the beneficiary of all of the money that the government pumped into the stock markets. You see, one of the most important things to do and to realize is that, yes, when you have significant amounts of money, things can be a little bit easier. But that doesn't mean that you can't ride the giant's shoulders. The stock market is a wealth transfer, but it can also be a wealth transfer for you as well if you're in it. And so one of the things that a lot of people are afraid of is to get into the stock market because they're so afraid of losing money. And I've been that way for probably over a decade. And the moment I got over the fear and the concept of being able to put money into a company and then walking away from it and saying, okay, great, I'll see you $500 a year from now or $1,000 a year from now, that's when I began to make money in the markets. And to be honest with you guys, it's one of the greatest things you could possibly do because it helps ensure that you too are benefiting from when governments are helping to prop up big business. Now, I do think that, they probably went overboard. Yes, they put too much money into the stock market and into large businesses, especially not requiring them to pay the money back, which is absolutely insane. They didn't even do that back in 2008, back with the TARP money. They were required, as in the banks, were required to pay the money back. And what they did was they even went to great lengths, meaning the government, to hide which banks were in stress. And they just told all the banks, you all have to take the money and you all have to pay it back to kind of help protect the integrity of all of the banks. Well, this go around, they said, you don't have to pay the damn money back. And so this is why you guys have to start investing into the markets. It does not matter how little bit of money you have. You don't have to be a stock market expert. You don't have to watch a lot of earnings sheets or, look at a lot of technical indicators. Just buy stocks that you believe in. Just buy a share of Apple. Apple just split 5-1 or 4-1. I can't think of which one it is, but they just split here recently last week to make it more affordable for the average people like you and me. Tesla also split as well. Tesla at one point was $170. I bought it and I sold it at $190, and I said that it was too high. I thought it was overvalued at $195. Well, Tesla just recently went to $2,200. Now, yes, it has split and it has dropped quite a bit, about 25%, and this is another good time to buy. So there are opportunities, guys, to make money. There are opportunities to grow wealth, and there are opportunities to help solidify protection and financial security for you and your family, and you just got to take advantage of it. So if you guys haven't already, I highly recommend you guys start investing into the markets if you haven't. And just as important as that, I'd recommend you guys subscribe to this channel. Reason being, this is a financial education channel, and I like to think it's one of the better channels on YouTube. And because there are a few channels that are talking about these things, but not quite as in depth as I think we are here. So if you guys do appreciate the content and the time put into this, I highly recommend you guys to subscribe, but also please just give it a simple thumbs up. And if you guys want to take it even further, leave me a comment below. Let me know what you guys think about the content, and also let me know what you guys would like to have discussed in the upcoming videos. Other than that, thank you so much for the support and for watching the video. And if you got to the end, leave a like, and I'll talk to you later. Take care.